What is going on, traders? The main question that I get from people on social media who are not my students yet is, how do you get the draw liquidity right so many times? Because if you don't know this yet, I actually get the draw liquidity right. And I mean, per session, I get it right with a 90% accuracy rate. So 90% of the time when I say price is going to go to point A or point B, it will actually go to point A or point B. It's as simple as that. So before the New York session, to my students, I basically say price on EU, on gold, and on NAS is going there. And 90% of the time, it actually goes there. And I'm going to show you exactly how I do this. I see a lot of traders that really trying to establish a daily bias or a super higher time frame price objective and then try to trade towards that on, let's say, the 1 minute. It doesn't really make sense to look for a draw liquidity on the 4 hour if you are going to be trading the 1 minute. What I mainly said is going to be an intraday bias. On finding my draw liquidity on the 15 minute, what do we see? We can see here that the Asian session was ranging, the London session both went to the downside and the upside, right? So that would mean that during the silver bullet session, you would not have been able to grab a trade long and would have missed on this beautiful move to the downside. So in this video, what I really want to do is I want to teach you how you can establish a accurate draw liquidity on the 15 minute or even the 5 or the 1 minute time frame. Before we go into how to find it, let's really simplify the draw liquidity because people make it so difficult and it really doesn't have to be difficult at all. How can you find a draw on liquidity? To me, the market is very simplistic. I really simplify the market to myself and also to my students because, I mean, come on, it's difficult enough as is to actually get a profitable system in place. To me, the market does one of two things. It either builds liquidity or it takes out liquidity, right? These are the two phases that I mainly see. So we're building liquidity and we're liquidating that liquidity or sweeping that liquidity, right? And here, for example, we swept liquidity. And once we sweep liquidity, we know that we are going to target a next pool of liquidity. And that is exactly what the draw on liquidity is. So here, for example, we can see that we were building up liquidity because we had all of these lows who got respected, meaning that liquidity was built here and then price went to that. Those are the two main things you need to understand about liquidity and establishing a draw on liquidity. So let me quickly draw up a simple example of how you can easily go and move with the market. All right, so I've drawn a simple example and some of you will already start thinking about the MMXM model, which is completely correct. This is, of course, based on that, but it goes much further than that. It's not just a specific model. This, to me, is how the markets book, right? So what do we see on this specific chart example? And I will go into the live examples real soon. I'm not just a theoretical trader. I will definitely show you examples on the chart so you can actually start mastering this yourself. So what we can see right here is that we had a buildup of liquidity. Price went lower, respecting that liquidity. So we know that a lot of traders, and with a lot of traders, I mean, we have the support and resistance traders. We have the supply and demand traders, right? We also have now the SMC traders, right? Because here we had a buildup of liquidity and here price tapped into that. And now even some ICT traders are watching this, right? Because they're using way too mechanical models. They forgot the bigger picture of what ICT actually is. So we basically know that there is a lot of liquidity resting above these highs right here. Right here, we set up a new pool of liquidity. So these lows, they all respected each other. None of these lows got swept. So a sweep would be, we build up this trend line liquidity and then we take that out before moving upwards. That would be an efficient move, right? Because we liquidate all of the open orders that we have there. So if we do that, we do not have liquidity here. But in this case, since we respect them, we build up liquidity here on the downside. So then we can see that price pushes up. We have a fake little reaction to the order block that we have right here. So again, all of these traders who already were positioned in, or those who were not positioned in yet and missed out on this move, who really want to catch it now, they are going to be looking to short off of this level, which builds even more liquidity and stop losses right here. And then what we can also see is that here we respect liquidity. Again, we respect all of these lows, so we are building liquidity. At that point, price pushes higher. We liquidate this high right here. So now we can already start thinking, all right, so I see what price is doing. I see a very efficient sweep right here. the higher time frame and also the lower time frame. And then now I can see displacement through that low right here. What can we start thinking? Price might just be reversing. And if we now have to establish where price is likely going to reverse to, that is actually mapping out the drawn liquidity. So we had already established that right here we had a buildup of liquidity, and we also have a buildup of liquidity down here. When it comes to establishing our draw on liquidity, it's very, very simple. This right here would be our first point of interest, right? This is our low-hanging fruit draw on liquidity. Low-hanging fruit meaning that because we have clear liquidity right here and there is nothing really in between that we can target, that this would be a very high probability target to hit. So the market is much more likely to do this than to do this whole move, right? But then of course, if we think about an external point to be targeting, we could look at this as a next possible draw on liquidity. Now, I also teach my students that we don't have to just fixate on either this one or on that one. What we will learn to do is that usually you take partials here and then you basically wait. Do we see the market sweeping this level and indicating that it might actually want to reverse? Meaning that there was not enough liquidity grabbed right here, or that there was not enough resting liquidity down here? Or do we displace through this level as well, meaning that this was not the objective and that this down here was actually the objective? That is something that you will be able to catch and manage if you follow my educational material. Let me rephrase this example. I'm just going to go to the charts and show you some examples of how this actually works. Let's imagine a scenario here. We took a short. Let's say that we noticed that the market made such a move. What we could then do is we could establish a POI. The POI could be an order block. The POI could be a breaker block. The POI could be an FEG, right? It can be absolutely anything. So let us imagine that we took a short off of a fair value gap right here, or the breaker block. Doesn't really matter. Our first target is going to be the low right here. All right, so let's imagine we close that fully. We close the entire position and we net, if we were covering the high, around 2R. Let's say we wanted that 2R, we pushed it a little, there we go. We made 2R in this specific trade. And now what we can see is that the market is moving lower, way lower, right? A lot of people, what I see is that, oh no, I missed the move and I'm going to quit trading because I missed the entire move. No, that's not true. Because as we know, if the market displaces through this level, that means that it didn't want this liquidity. It wants more than that. Price doesn't just displace low without a reason, and I'll show you that in the live examples in a second. We can now use the continuation model. There are a lot of free videos on the continuation model. I will link one in the description, so do check that out after this video, because combining the drawn liquidity and the continuation model that I present is going to set you up with a foundation that is extremely solid. All right, so now that we know that we displaced through this specific drawn liquidity that we set, we can actually remove this one, because now we know the objective is likely going to be lower. We know that because of the displacement that we see. We know that because this level is not being swept and price is reversing. No, we're displacing through that, indicating that the market wants something more. We know that the market is not going to straight line to that specific low. Sometimes it does, sometimes it doesn't, right? But usually we get another re-entry opportunity. And this, for example, is a perfect re-entry opportunity. We can see right here that we have a sweep. We sweep these relative equal highs that we put in and we are displacing lower. Now, we still know that the overall drawn liquidity, external drawn liquidity that we're targeting is down here. So what can we now do? We can again start looking at a fair value gap. We can take a trade off of this level because we now know that price has made itself efficient because it took out the relative equal highs here. And we know what the target is. So we then wait for price to possibly fill us. If we don't get filled, then it wasn't our position to begin with. Keep that in mind. Now, just simply look at this specific print of price and tell me that you have not seen this in the live environment yet. I'm going to show you an example. I'm not going to cherry pick. Today is the 18th of August. I will go over some examples in the recent week on EU. So here, while a lot of people, ICT traders, for example, already capitalized on 2R and called it a day, there was a perfect high probability second trade if you simply know how to establish an accurate draw on liquidity. Let's go to some examples right here. All right, so I have drawn a dashed line where last week actually began. Now we are going to try to see if the logic that I just presented, if we can actually apply that to the charts right here, right now. What we're going to do is we're going to first cover the Monday. I'm going to go to right before the next day starting. This is the Monday. Let me quickly wait for the indicator to load here. All right, let us talk about what happened here on this specific Monday. As we can see, before the Asian session started, we basically built liquidity. We took out that liquidity. That is not something that we could trade, but that is something that we could see, right? So we took out this liquidity, price then went higher. We had a beautiful market structure shift. Price then came lower, mitigated this order block, started running higher. And then here, what we can see is that we had relative equal highs, but we didn't sweep it. Instead, what did we do? We actually ran above it quite aggressively during that London session, indicating that price wanted to move higher. Because again, we have established that if we do not simply sweep and tap above, that price is likely going to want to continue moving higher, right? Otherwise, we would see an explosive reaction. And let's actually go to the 5-minute, which will visualize it quite a lot better. So here, as you can see, price went higher, displaced higher. We then created relative equal highs here. And of course, this is never going to be as picture perfect as I showed in the theoretical example, but it all boils down to the same. Price then went lower, respected this level. And in the process, what do? We built relative equal lows, as we can see. After we built those relative equal lows, and that of course becomes liquidity, price then came back up, swept this high quite aggressively, right? So what could have we done? We could have likely targeted a level of liquidity, but of course this was in between sessions, so we don't usually trade that. Price then continued to move lower. And then here we finally took out the level of liquidity that we highlighted. So what do we do then? We wait for a market structure shift, and then let's jump to the 1 minute here. Okay. Since we already know that we took out relative equal highs, the market has showed us that it wanted to move higher because of this move. We then set up relative equal highs with that New York session high. Price then built liquidity to the sell side right here. We then took out that liquidity and had our market structure shift. What do we do then? Wait for it to build liquidity, which we did right here. So right below this low, could have actually taken a long position. All right, so as promised, I would show you some live examples here on the charts and do some explaining as to what actually happened and how I would have personally read the draw on liquidity. So right here, right now, we are on a Monday, the 12th of August, the first day of last week, of course. And what we can see is that during the New York session, we set a high and a low as well. So that was basically previous day's high and then also previous day's low if we neglect the Asian session from Sunday, right? So the day opens right here. So if we look at where the day opened, this was the only swing low in that day. So this is the previous day's low and this is the previous day's high. Then Tuesday starts, and on Tuesday, what can we see is that in the London session, we run above relative equal highs that were set up in the Asian session and in the New York session, right? So this was liquidity. We took that out right here. And then we noticed a reaction, and we can look for entries on the lower time frame in a second. I just wanted to quickly explain what I was seeing. All right. So as a first target, what could we look at after we see the sweep and we see the displacement to the downside? Our drawn liquidity number one is going to be the low hanging fruit, which is the Asian session low right here. So we could potentially take a short position, probably somewhere over here, and then target that first bit of a draw on liquidity. What we could also do is think like, okay, price really took out a majority of the liquidity. Looking to the left right here, there's not much left other than this external level right here. Price has actually been quite inefficient, meaning that all of these lows were still being respected. So we can assume that a lot of people are into long positions. So what we could then do is target the previous day's low, right? Knowing that the majority of the liquidity is likely going to be residing there. And to the left-hand side of that, we also have relative equal lows. So then price pushes lower and takes out those levels. And after that happens, we can even go further. But let's first quickly jump to the 5 minute right here and see if on the 5 minute there was an entry opportunity, and then also on the 1 minute. Right, so on the 5 minute, we can already see a picture perfect entry opportunity. So here we had a very efficient sweep. We had our market structure shift right here, as you can see, with displacement displacing through that previous low. And then what we can see is that we had a fair value gap right here. So the entry on the 5 minute would look something like this. Off of this fair value gap, we tap into the fair value gap and then start running lower. And if we would have simply targeted that first bit of a draw on liquidity, we would have been able to net 4.4R in a matter of, all in all, 50 minutes. And on those 50 minutes, you would have made 4.4R. That is very, very nice. And you could have said, well, I'm just going to go for a partial. I'm going to take off, let's say, 50% of my position, netting you 2.2R. And then I'm going to be targeting that external liquidity, that previous day's low. And that is what I usually do. And then you would have been able to get 10.8R. And this is simply on the 5-minute chart, by the way. You can easily go to the 1 minute and probably refine this even more. Let's quickly look at the 1 minute here. And I must admit that looking at the 1 minute here, this is pretty damn refined. So this is a very clean entry. And I would have likely taken this from the 5 minute nonetheless, because there's no real opportunity other than we could have probably looked at this specific price leg right here to take an entry off. This 5 minute entry was absolutely beautiful. All right, so let us continue, because I was mentioning after we take out those draws on liquidity and we see this reaction, we can then start assuming, hey, this might have just been a sweep. And indeed, it was a sweep. If we look at what price has done right now. So yes, we took out the majority of the liquidity, but now we know that we took out the majority of the liquidity on the sell side. And we know that the market basically moves from liquidating buy side to liquidating sell side to liquidating buy side, and so on and so forth. We can assume that price is likely going to be targeting its inefficiencies on the buy side. And if we take a look at those inefficiencies, what can we see? We are building a massive amount of trendline liquidity. And on the 5 minute, I think it's going to be a lot more clear for you guys. So looking at this, what we can assume is that a lot of people are going to be positioned in the shorts. And again, those people, who are they? They are supply and demand traders. They are trendline traders, possibly even support and resistance traders who took trades off of this area right here. So we know that there is a bunch of liquidity generated on the buy side. And that is the next thing we can start targeting. So here we have the sweep, we have the market structure shift. And on the 1 minute, you will see that that's probably going to be somewhere over here. Then we have our entry. Let's say we enter off of the extreme fair value gap here on the 5 minute. I'm pretty sure that right here on the 1 minute, we can spot a sweep, so we can manage off of that. And then what do we target? We target the opposing end of that trendline liquidity. And let's even say we play it safe and put our stop loss all the way down there. This would have still netted us 3.88R. And let's be honest, this is the low hanging fruit. So if we then zoom out and try to take a look at what else is there, we can then see that the next external point of liquidity is at London high. So this could then be our drawn liquidity number 2. And now again, I'm not looking at a daily buys, and I do realize that there is liquidity down here, but the more recent the liquidity is, the more important it's going to be, because we can assume that people who are in positions from these days, they are likely already liquidated. The London traders, they probably got liquidated here with the New York session low, taking out that liquidity. So we always have to look at what is the most recent liquidity and what are the majority of traders doing right now. So here, for example, we would have profited very easily. And then the day is probably over for you. If you would have caught this entire move, you would have likely been very happy. But overall, I would call it a day. As soon as I see that price starts to range above this, I'm not expecting a second major run in the New York session where I can basically target the other end, right? That's not how the market books. The market usually makes one extreme move per session. So this, for example, let's say is the London session. And then the New York session might just reverse or might have a continuation after a liquidation. But usually, it's only going to be one move per session, right? Cool. Let's actually look at the next day here, because I'm not making this stuff up. This happens every single day. So here, what do we see? We can see that we build up quite a bit of liquidity, right? We can all see that. Then right here, what can we see is that we actually liquidate that Asian session low and we start running higher. Now, if we go to the 1 minute, we quickly use the replay tool so I don't have to scroll my finger off. But here we can see that there was a clear liquidation. We finally get our market structure shift right here. I don't see this as a market structure shift. My students will know exactly why. That is very low probability. And then if we look at where the extreme fair value gap is, we can see that that is right here. We can take a long position off of that. We can manage our stop loss right here. And what do we target? We can target as a first target the Asian session low, because we know that there's going to be a lot of liquidity there. We know that there is a lot of liquidity built up here in general. And we could even go further than that and say another very high probability drawn liquidity point would be this right here. And since we have already confirmed that there is a reaction to the liquidity that we built and that we are likely going to continue pushing higher off of that, we can even look at a higher time frame structural point that we can target right here to the left. So we know that we've ran through this, because again, if we run through it, we're not intending to liquidate it. We are going to go higher. So what can we then do? Looking to the left, to the left, to the left. Run through all of this without a reaction. So can we assume this New York session high right here is going to be our external drawn liquidity? So if we then target first this, take a partial there at around like what would you net if you take a 50% 3RR and then let the rest run to over here? You get an 11R trade. And it's not that difficult. Everyone can see it, right? It's very logical. So then we do it all again. In the New York session, we wait for a liquidity pool to build up, which we do right here. We take out that liquidity pool. We don't run further. As you can see, this is a very strong rejection. Take that out. We look for a fair value gap, which we have right here on the 5 minutes. This I would refine personally on the 1 minute. What do we target? The low hanging fruit. And that would be enough. That would be 2.5R. And boom, you're done. 2 trades, done for the day. Every session, you can establish the drawn liquidity this way. It's very simple. Just put in some practice. Look at where the liquidity is. If you struggle with the basics and the fundamentals of actually understanding to how to read the market, or if you want this fancy indicator and everything that I've created for the community, you can find all of this on the website. I will link it in the description. We do have a course available. We do have an elite membership available where you can basically chat with like-minded people, get access to the indicator, and so many more benefits. If you're interested in that, you can check out my links in the description. Other than that, guys, thank you so much for watching. I hope you found value. If you did, I gave it away for free. So all I ask for you in return is to quickly like the video, leave a comment about the things that you liked or disliked. And yeah, other than that, subscribe and I'll see you in the next video. Have a nice day, guys. Bye.